long history Indian markets and various ways to slice the data, but long history Indian markets have given good returns. Is this the time when the SIP investor should rather not stop the inflows because you're getting at decent valuations relative to 26,200? It may get a bit better, of course, but are you, let's say, with a 3-year view on India, 5 years too long, 3-year view, constructive on the potential returns from Indian markets currently?
I am.
You are?
Yeah, so personally also I'm putting money. I mean, you may, debate on what type of stocks you are putting money into. But I mean, that's my broad view that the market's going through a cyclical issue, some domestic issues, some global issues, which always happens. Markets are not linear. I mean, they don't go one way. So these are the challenges you face in a market over the years. And over a period of time, you will see positive returns. If the earnings growth are strong, it will reflect in the stock price at some point or the other. Obviously, there are times when, there are certain issues, markets are nervous. Those are time to, add, buy if you are convinced. If not, stay on the sideline. But over a period, I think we will do similar returns that we have done, say, in the past 5 years or the past 10 years. I mean, the Nifty returns 20 years is around 13%.
Right.
I doubt if we will not give the same return for the next 10 or 20 years, which is roughly 12-13% return. If you're expecting 20%, 30% returns,
वो नहीं होगा, चलो ठीक है.
वो नहीं होगा, वो पहले भी नहीं हुआ. That will not happen. If you're reasonable, then there is enough and more opportunities in the market.
So the guy or the lady who's invested in banking stocks, right, for the last 2-3 years, saying that there is maybe half decent earnings growth in select pockets, valuations have been reasonable, hasn't quite seen gains. Now I'm trying to get to the nitty-gritties, right? Do you reckon banking is an attractive pocket because it is large caps, it is showing earnings, balance sheets are clean, etc.? Or are you looking at, are you not necessarily that gung-ho on banking?
So if I look at the bank stocks that we invested in the last 3 years,
PSUs, yeah.
They gave us very good returns.
Yeah, that's true.
So I'm not complaining right now. Okay, but I'm not saying that we are not invested in the private sector, but I'm just giving you an example. So it will be unfair to, say that you invested in a banking fund. It's better, which if somebody asks me, I say you put it in a large cap mutual fund.
Yeah.
A large part of your flow should be in large caps. You can put a small percentage in small and mid cap because that's how returns will be over a long period of time. If that is what is being done, then most fund managers smart enough to, figure out the portfolio within that. Now, if you go into specific banking funds or say a PSU fund or say a defense fund, those are dangerous territories.
So thematic funds are a problem.
So those are, and they typically come at the peak of the theme.
Yeah.
And that's what we saw. I mean, we've discussed this before. Then when we invested in the PSU fund in 21, the fund size was 800 crores in one of the fund. And we told the fund manager, you should be marketing this fund. And then they launched a new fund when the theme was almost over. And then we were exiting from there.